If you're planning to buy a car or sell your existing one, a recent rule might have caught your attention. In its 55th meeting, the GST Council decided to impose an 18% GST on second-hand car sales, which has sparked confusion and concern among car owners across India. This development has led many people grappling with questions about how this new tax will impact their finances and decisions. But most of you don't need to be worried. Let's understand why. To begin with, this new GST rule does not apply to individual car sales. If you are selling your old car to another private individual, whether it's a friend, a neighbor, or someone you met online, you won't have to worry about this additional tax. The primary focus of this GST hike is on businesses, specifically those that buy and sell used cars while claiming depreciation benefits. This includes companies that regularly deal in second-hand cars, and those are the ones that are most impacted by this new tax rule. The government has also provided a clear clarification to address people's worries, ensuring that individual car sellers and everyday transactions remain largely unaffected by this new tax rule.
An individual selling to another individual, no GST. If there is a regular registered used car seller who buys EV, does some propping up in it, adds value to it and then sells it, it is on that margin, the margin value between purchased price and resale price. 12 लाख में खरीदा, 9 लाख में बेच रहे हैं second hand used vehicle के नाम पर. On the margin is only this 18% is being put, as would be for any used car.
However, the big question remains, how exactly will this tax apply and what will it mean for everyone involved? Dealerships often buy cars from owners, perform quality checks, repairs or upgrades and then sell these cars at a premium. Apart from this premium, there is also a market value of the car based on depreciation. For cars, typical depreciation rates can be first year, around 15 to 20% of the car's initial value, second to fifth year, approximately 10 to 15% annually. After 5 years, the depreciation rate can vary, often around 10% per year or less, depending on maintenance, condition, and market demand. If a dealer buys a car with a depreciated value of 3 lakh rupees and after enhancement sells it for 3.2 lakh rupees, the 18% GST will be applied to 20,000 rupee profit margin. This additional cost might be passed on to you, the buyer. Remember, this GST is only on the profit margin, not the entire sale price, which is important when you're considering the total cost of the car you're interested in. For more business and personal finance updates, follow Republic Money.